What's up, traders? So welcome to another episode again, market structure part 2. So on our previous video we talked about market structure part 1. Alright, so if you haven't watched that video, go and watch it. So today we are talking about market structure part 2, inducement. Alright, inducement. So I make mention of inducement yesterday. So and I want to tell you that inducement is one of the concepts in the forex market that push the market. Alright, without inducement there's no buy, without inducement there's no sell. Alright, without inducement you cannot buy, without inducement you cannot sell. So inducement acts as most important concept in trading SMC strategy. Alright, today I will be showing, I've already showed yesterday, but I will be using live chat. Alright, for a quick recap, let me just make the structure one more time. So this is a diagram of how these things work. So in an uptrend, inducement is your recent high. Alright, so assuming this market was trending upside, giving us a higher high, higher low, and new high, where is your inducement? Inducement is your recent high. Your inducement is here. This become your inducement. This become what? Your inducement. This become your inducement. Alright, so we are expecting price to do what? To retrace back, take out your inducement and mitigate your POI here and give us a valid break construction. This not be your BOS. Alright, so this is what we are expecting to see in an uptrend. So your inducement is your recent high. Alright, your inducement is your recent high. What do I mean by recent high? Now let me see, give you another example again. Assuming we have a bullish swing, alright, like we have a series of higher high, higher low, higher high, higher low, higher high. Here we haven't got to inducement at this point. So inducement was sitting down here at the first point. Alright, inducement was here. This was your inducement. Okay, so price came here, break this recent high. After breaking of that high here, it went up to form a new high again. Alright, so your inducement transfer from this point to this point. Do you understand? Alright, so this is now your inducement. This low now is no more your inducement. Your inducement have transferred from this point here to this point because we have a new high. Alright, so at this point now, if price also retrace back again without taking out this low and give us a new high again and break this new high again, your inducement will now transfer from here. Your inducement will now transfer from here to this point. Alright, so your inducement have shifted from here to here and here. Alright, so until we see market comes back to take out this inducement and mitigate our POI here, our POI, either order block or order flow at this point, then we cannot take our order to buy to break this high, which should now give us a valid BOS. Okay, so this is it. Then we now have a valid break of structure. Okay, I told you yesterday the difference between this break of structure and this break of this high. The difference is that all this high does not take any inducement. There was not inducement taken out. Alright, this was just a break of high, break of low, break of high. Alright, this is your high, low, high, low, high, low, high. But this particular one came back and sweep this low here and mitigate our POI. Then we can buy from here directly from this zone here. Bring out your long position and buy from here. Put a stop loss just a little bit below this low here, this low. Alright, target your recent high, which is this. So this is how you would have to take this trade. Alright, so what I'm trying to explain is that your inducement was sitting down here at the first point after a break of this high here. This is your high, low, high, low. But inducement now transfer from here to here. After this break of this high, inducement transfer from here to here. So after this break of this new high again, inducement now transfer from here to here. I hope you understand. Then we can say that price retraced back here and took out this low. This is our last low. Price came back, took our last low and give us a valid break of structure. Alright, so therefore if you want to define inducement, if we attempt to define inducement, we can say in an uptrend, we can say inducement is a sweep of the recent low. Inducement is the sweep of the recent low. So inducement is a sweep of the recent low. Alright, so inducement is a sweep of the recent low. So in this case now, you can see that we have this low here. This is your lower low. This is your higher low, higher low. Inducement will not transfer from here to here. Inducement will transfer from here to here. Okay. Then after this new break here, inducement now transfer from this point to here. Then we see this market comes down to take out this inducement that is here. Then now led to a break obstruction. Alright. So without inducement, we would not have a valid break obstruction. Alright. So after this inducement now, price came back here, took out this inducement and gave us a valid break obstruction. This low here now that came to take out this other low is now our major low. Alright, this is now our major low and it is called chalk. I told you about chalk yesterday. Chalk, which means change of character. It means that whatever price do from this region here to this region, price is still in a bullish trend. But if market close like this above this zone here, like if market close body candle above this zone here, we have disvalidated this. Price is no more bullish anymore, but price is bearish. Alright, so that is it. So we can see market can also create another inducement again, or even trend bearish. But as far as this low is protected, we are still what? In a bullish phase. So price can give us candle here to buy here. Then we can take our buy order from this point. Let me remove this one. So maybe we have a pure here, this point here. You can see that price have mitigated it here. We can go ahead and take out our long position from this region here. Place our SL a little below it. Target the recent high. And we can say that price will definitely retrace back to mitigate it here and give us a valid break obstruction. Alright, price will not give us a new break obstruction. Sure, we understand this concept. So your inducement is the sweep of the recent low, alright, in an uptrend. Alright, inducement is a sweep Inducement is sweep of the recent low in an uptrend. Inducement is the sweep of the recent low in an uptrend. Okay, so let's look to the downtrend. So in a downtrend, inducement is the sweep of the recent high. Inducement is the sweep of the recent high in a bearish trend. So inducement is the sweep of the recent high in a bearish trend. What does that mean? So assuming we have lower high, lower low, lower high, lower low, lower high, lower low. It simply means that after this break of this high here, after the break of that high here, our inducement was sitting down here. Our inducement was sitting down here, but we saw that price gave us a new break of this high. There was a new break of this high. Our inducement was now transferred from this point. Our inducement was now transferred from this point to this point here. Alright, our inducement was now transferred from this point here to here. So our inducement was transferred from this point here, to here. Alright, so after this recent break again, our inducement was also now transferred from here to here. Alright, so our inducement was now transferred from this point again to this point. So until we have market retrace back here and took out this inducement and mitigate our POI. Alright, mitigate our POI. Our POI is our point of interest. Alright, then we can now bring our short position from here and buy. Bring out our short position here, or I make our to just like exactly this pattern. Is now become our stop loss, targeting this high here. Alright, so this is how we took this trade. So I'm going to be going into this chart now, but I want you to understand the concept of inducement. Alright, I want you to understand the concept of inducement. That inducement act as as at our what fuel the movement in the market. Alright, inducement is what fuel the movement of buyers and sellers in the market. So without inducement you cannot buy. Alright, so let me make another example in a downward trend. So we have a retracement here. Price retrace back here to take out this low and give a new break. So in this scenario we have this break here. Okay, and then we have our inducement sitting down here. You can see that price came back here to take out inducement. Alright, price came back here, take out this inducement and mitigate either our order flow or our POI here. You can go short from this particular point here. You can go short from this point. Alright, so without inducement you cannot buy, without inducement you cannot sell. Alright, so I believe you understand this topic of inducement. Alright, so without inducement you cannot buy. So inducement is the sweep of our recent low, which means that we always have, this is the first low here. Price will not retrace back to take out this low. We have another low again. This is our lower, this is our higher low. Price did not come back to take out this low. Price move again and retrace back again, give us this higher low. But you can see that this high retrace back here to take out this low. You understand? Price retrace back here to take out this low. So this is when we are interested to take our trade from here. Alright, this is when we are interested to take our order from here, because price are talking about this inducement from here. So inducement sits at every low here. Inducement sits at every low. Inducement sits at every low. Alright, sits at every low. But we only want to take trade when price comes down to take out this inducement. Alright, so we can take an order from this POI that is here. Make a stop loss below this high and target the recent high. So this is how you could have taken this trade. Now let's go to the live chart. Alright, let's go to live chart. Let's go to live chart. So let's clear everything. I believe you understand the concept of inducement. And let's go to live chart. We want to analyze this market, so pay attentively as we analyze this market together. Alright, pay attention. So let's start from this point. So this is good. Alright, this is good. SAUUSD. Look at it here. SAUUSD. And this is on 15 minutes. Alright, so let me just quickly show you something. Alright, so this is your time frame. If you click on this 15 minutes, you will see other time frame. Let's click on it. Let's see. So if you click on this 15 minutes, you will see time frame. You will see from 1 second to 1 minute, 2 minutes, 3 minutes, 5 minutes, 10 minutes, 15 minutes, 30 minutes, 45 minutes. you can see for yourself. You can see the 1 hour, the 2 hour, the 3 hour, the 4 hour. Alright, and you can see also for yourself the daily, 1 week, 1 month. Alright, so what does this actually mean? This means that each candle that you are seeing here represents, assuming we are on 15 minutes, this is 15 minutes, alright, 15 minutes. It means that one candle here, alright, one candle takes 15 minutes to form. Alright, one candle takes 15 minutes to form. Alright, so this candle now won't take 15 minutes to form. Okay, and if we go deeper to our 4 hours time frame, which is our higher time frame, 4 hours, this is 4 hours. This simply means that one candle represents 4 hours. That means it takes 4 hours for one candle to be formed. Alright, it takes one candle for 4 hours. It takes 4 hours for one candle to be formed. Sorry. Alright, so let's click on the 4 hour. Let's see what it shows. So I want to show you something. It takes 4 hours for each of these candles to be formed. That means that if we go to our lower time frame, which is at 15 minutes, we will have series of candles. Alright, so let's do example. This candle here, this green candle, let's mark it. This is just one candle, right? This is just one candle. But if we go down to our 3 minutes, we will see random of candles here. We will see a lot of candles formed from this point in this box, because this is higher time frame. This is 4 hours. This is now 4 hours. Alright, this is 4 hours. That means it takes 4 hours for just one candle to be formed. It takes 4 hours for just one candle to be formed. This is another 4 hours. This is another 4 hours. It takes 4 hours for each candle to be formed. Now, these balls that I've highlighted here, so now let's go to 15 minutes to see how many candles does it form. So this is the box we highlighted. This is our 15 minutes. We are switched from 4 hours to 15 minutes. Okay, we are switched from, and this is the box that we highlighted in 4 hours. Alright, so let's count how many candles that was formed in this point. So we can see that in just 4 hours, this was the candle that was formed. 1 candle, 2 candle, 3 candle, 4 candle, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. 22 candles was formed in just 4 hours. Alright, so one of these candles represents 15 minutes. Alright, so what I want to explain is that time frame, this is time frame. Alright, this is time frame. It means that candles are formed based on time frame. Alright, so depend on the time frame you are. So if you are on the daily time frame, this is a day. It means that one candle, that means it takes 1 day for one candle to be formed. Alright, now let's click on this 1 day. Let's see, click on this 1 day. Now I've clicked on the 1 day. It takes one single day for each candle here to be formed. 1 day. Alright, it takes it takes a day, which is 24 hours, for this candle to be formed. So this candle that you are seeing that is just 1 year now, this red one that you see is just one now. If you go down to our 15 minutes, we'll see a lot of candles. Let's try, let's see. First, let's mark a pause on this. Let's see. So this is a daily candle, right? Now let's go down to our 15 minutes. This is it. This is our 15 minutes, alright? These are 15 minutes. This is our 15 minutes. So let's click on it. Let's see. Now you can see for yourself. This candle that was 1 day to be formed. Look at how many candles that was formed. Look at how many candles that was formed. Look at how many candles that was formed within just 24 hours, which is 1 day. Alright, so time frame matters a lot. Alright, time frame matters a lot, but I'm not here to analyze today difference between higher time frame and lower time frame. Alright, so but you can understand that from 1 minute, 2 minutes, 3 minutes, 5 minutes, these are just lower time frame. Alright, but if you go down to the next row again, these are higher time frame, which is the 1 hour, 2 hour, 3 hour, 4 hour. These are also higher time frame, the 1 day, 1 hour. That means it takes 1 day for one candle to be produced in this particular point. So these are kind of swing traders, alright? Swing trader. So now let's do what we are here for. We are here for market analysis, right? Market structure mapping part 2. So we talk about inducement. So let's now dive deeper. So when you come to your chart, this is what your chart will look like. I'm on the 15 minutes, right? This is 15 minutes time frame. 15 minutes time frame, and I will give you assignments after this lesson. Alright, so let's start from this point. So guys, we talk about pullback on our previous candle. So where we have a pullback here, this candle here pulls back, alright, and break this high here. So this is our break of high. And where is the low? This is the low here, alright, and we still have this low here. This is the low. So price came back here. This is the high here. This is the low, alright. So price came back here like this. This was the move higher, retrace back and break this higher. Price retrace back to take out inducement. Exactly what I showed you guys from the example. Price came back here and took out inducement from this point. This is inducement. So after inducement, we have a valid break or structure from here. We now have a BOS. Alright, we now have a BOS. So we took out inducement from here. So after inducement, you can always buy or sell from this point. Alright, you can always buy or sell after inducement taken. Alright, so that is it. Let's keep marking our structure. So now we have gotten one. This is our first inducement taken. Alright, price retrace to take out this inducement, and we form this new break or structure. All these are internal structure. Alright, these are internal structure, guys. These are internal structure. Price retrace back here to take out this inducement and start forming after this inducement taking, we have a break of this high here, retrace. These are all internal structure because everything here is still, it has not broken this high here that took out this inducement. So these are just internal structures. Alright, until we have a valid break of this particular high, which is called your break of structure. Alright, so if I'm analyzing, I won't analyze those internal structures, so I will just go for the majors one. Price took out this low here, which is our inducement here, and give us a valid break of structure. Alright, so here we have a valid pullback. This was a valid pullback. If you have not watched the pullback video, go and watch it. Price went higher, come back to sweep this low here. After the sweep of this low here, close above. Alright, so where is our inducement? Our inducement is sitting down here. Alright, our inducement is sitting down here after this valid pullback. Alright, our inducement is sitting down there. So let's go further again. Price went higher here again, retrace again, and give us a new break of this high. Where is our inducement? Our inducement is now transfer from this point to this point here. Okay, so we can see that price came back here, took out this inducement, and failed to close above. This is now a sweep. Alright, this is now a BOS sweep. This is an advanced pattern. Alright, this is just an advanced pattern, but I'm not here to tell you about sweep. We are focusing on inducement. Alright, so this was a sweep. Alright, which was a sweep. Remember, we have a choke here after inducement here that led to this break construction. We have a valid choke here, which means change of character. A valid change of character here. Alright, I'm coming, guys. Let me check something. There was a trade that was looking to enter. Let me see what this trade produced. Okay, I was looking to take this trade. Okay, this trade was disvalidated. Someone. Okay. So let's go back to our structural mapping. Alright, so this is where we are. So it's good for you to always mark your structures. It's good for you to always mark your structures. So this was our inducement here. Alright, so price did what? Take out this inducement and sweep this high here, and we have a new low here, a new low broken. So this was like after this inducement here, price retrace back and break this low. We are not in a bearish trend. Alright, we are not in a bearish swing. Alright, internal bearish swing. So after this break of this high here, where is our recent inducement, guys? I told you that in a bearish form, inducement is a recent high. Alright, so where is the recent high? This is our lower low, lower high, lower low. So where is our inducement? This now become our inducement. Okay, this now become our inducement, and price break this point here. So after every breakup point, where is our inducement? Our inducement transfer from this point here transfer from that point there to this particular point here. Alright, look at another inducement again. Here there was a value pullback, price came like this, retrace back to take out this high of this candle. This is a value pullback. This is a value pullback, guys. After this retracement, price closed above it, so there was an inducement there. Look at if you this, can you see the distortion mapping now? We have a break here. Can you see it now? So we have inducement sitting down at this point. You can see it for yourself. Alright, so you can just go ahead and keep marking those inducement points. Keep marking them. So that is how you can locate your inducement. Alright, that's how you can locate your inducement. And look at another inducement again. After we have a move like this, this is what I was telling you guys about. Let me now, in this particular swing, we have this move here. Then we have a pullback. Then we have a pullback here again. Now in this, our inducement was sitting down here, but after a break of this high here, our inducement was now transferred from this here to here. But after a new break of this high here, our inducement was now transferred to here. Alright, so this is now our inducement. So our inducement is no longer here. So I said that inducement in the downward trend is the recent high. Alright, so this is our lower high, lower low, lower high, lower low, lower high. So this is the recent high. So this is where our inducement belongs to. Alright, so our price came back here, took out this inducement here, took out this also inducement, took also this in. So this acts as liquidity at this point. Alright, I have already explained what liquidity means. So this acts as liquidity. It points that the inducement was sitting is now turned to liquidity. Alright, so you can see that market came back and sweep everything that was there and gave us a value break construction from this point. So that is how without liquidity you can't enter your trade. Without liquidity you don't enter your trade. Alright, without liquidity no trade entry. So that is it. That is how you keep. Either you can analyze the market and make. So let's see and identify another inducement again. So this is a bullish trend. Alright, this is a bullish trend. Price retrace here but failed to break here. So this was when price break here. Where is our inducement? This is our inducement. But we say that price did not come back to take this inducement. Alright, so we had a new break of this high here. Where is our inducement? Our inducement will not sit down here. Alright, so here we had another break here. Our inducement keep transferring, alright, from the down part to this point. Alright, here we have a valid pullback. This is our inducement. Price did not take out this inducement. Inducement was sitting down here. Alright, so that is it. Price keep forming a new high. Here now we have a break of this high here. Where is our inducement? This is our inducement. You can see that price came back to take that inducement. Price retraced back after this break. Retraced back to take out this inducement from here and give us a valid BOS. Alright, so that is how you can identify your inducement. Without inducement, do not buy. You are just seeing market giving you this kind of structure. This is exactly what we have here. Break this high. So market will just giving us a break of it. This example now, this is it from here. Alright, you can see it for yourself. You can see that from this particular point here now, price not taking any inducements. Alright, price was just giving us a high low, high low. Let's analyze it. Let's see. Price was just giving us high low. This is it. This is high low. Break this one, give us a new high. Alright, then we have a new pullback, give us a new high. Here we have a pullback again, give us a new high. Pullback again, high. So we keep having series of high low, high low, high low in that direction. There was no pullback taken out. There was no inducement taken out from this edge. Alright, until this stage before price came back and took out in the inducement. Alright, okay, we have this candle here sweep this high here, and this candle here sweep this. So this is a correct pullback. Price came back here and took out this inducement. Which led to a new break construction. Alright, so that is how you can analyze your structure from identifying inducement. So your assignment is go to the recent chart. Alright, so this is the recent chart. Alright, you can use any currency pair of your choice. Now analyze from this particular point where you can see, where you can screenshot like this. Alright, and you can analyze from this part here, down to this point. Alright, this is your assignment. Mark out all those inducements, mark it out and send it to me. Mark it out. So this was in a upward direction, this is in a downward direction. Alright, so you keep marking inducement based on the high. This was another inducement but it was not taken. Alright, so that is it. So just mark this inducement. I'll mark it out. So let's mark this bearish. This is the last part of this video. So we can see price retrace here, push higher here, break here. Where is our inducement? This is our inducement. Push higher here, break. Where is our inducement? This is our inducement. Price retrace back again, break. Where is our inducement? This is our inducement. So but price came in and took out this inducement. The inducement was taken out at this point. So this is our inducement. It was taken at this point. Inducement will transfer from here to here, from here to here. So after this inducement taken out, we can fully mark our break construction, which is this. Alright. So that is it. So that is it. Alright. So guys, this is the end of this particular class. Alright, this is part of this particular class. So the assignment is very simple. Just go to your charts, go to your 15 minutes. If your chart is showing you daily candle, if it's showing daily time frame, you can change it, alright, by clicking on this time frame. Tap on it and it will show you other time frame. Understand? Scroll and you see 15 minutes. Analyze from 15 minutes time frame. Alright, click on 15 minutes and it will show you 15 minutes time frame and map out the possible inducement that you can see. Alright, map out the possible inducement you can see. Alright, so that is it for that. I'll see you in the next video. Alright, thank you.